What is going on, guys? Prometheus back here yet again with another episode of Risk, Reward, and Fire. Today, we got a little bit of trick or trade, playing on the Halloween stuff. Anyways, before we get started, I need you guys to like, subscribe, comment, turn on post notifications, and we're going to jump right on into it. So today, we had a little bit of a CPI print. So CPI came in at 3%, a little bit under forecaster expectations at 3.1. Previously, it was at 2.9. So a little bit of a tick up in CPI, not the biggest of deals. What does that mean for Bitcoin here locally speaking? How are we going to kind of navigate these markets? And what is our forward outlook, at least into the end of Q4? So Bitcoin here locally, we had a nice little pre-New York session pump into our supply region. And this point of inflection that I have drawn out right here on the chart. Now, it makes sense that we got a little bit of a rejection here on this morning, So what I'm kind of expecting here locally speaking, and something you need to be very mindful of, and a lot of people are talking about it, is obviously the 107 level. That is our weekly market structure. And that level is very, very, very important for how we are going to be shaping up into Q4. You got to hold that level. There's no ifs, ands, or buts about it. Otherwise, you run the risk of backfilling more of this wick that we had from the capitulation on Friday, the 10th of October. So what am I looking at here locally? So we have a demand region here marked out in green, and I would like to see some form of higher low get set in here on Bitcoin, coming down into this demand region and looking for some form of bounce out of that demand region. If we do get a bounce out of said demand region, to me, it then makes sense that with structure intact, with the trend line that we can pull here off of these lows, that we then target this supply region, and ultimately breaking this is then going to lead us to 116. That's going to be our high time frame point of inflection that is extremely important within this range. It kind of coincides with the mid-range of our high time frame range that we have marked out here. And it's also the point of origin that led us then into, obviously, the further expansion lower heading into over the past few weeks. If we can flip 116, you then are, talking about rotation back to range highs. And at minimum, coming into the supply region at 121. We will discuss that if and when we get there. But if I look at altcoins, guys, particularly, something I've been looking at quite a bit, and I discussed with the Discord in this morning call, is a few things. Let me clean this chart up here a little bit. So if you look at total 2ES, from a cyclical trend perspective, we have retraced every single expansionary move to date. So if we've experienced our retracement, each retracement has then coincided with some form of reaccumulation period that's lasted a significant amount of time. But the retracement back down to the expansionary lows has happened over a substantial amount of time. So if we're looking at the mirroring effect, we would expect that, ultimately speaking, said breakdown to the lows is then matched with a equal amount of time of reaccumulation, which then leads to another expansionary move, very similar to what we've seen previously this cycle. The reaccumulation has almost always matched how long the distribution took. So interestingly enough, if we go to, if we kind of are discussing that mirroring effect, the expansion move retracement, or the retracement down to the expansionary lows, or to the origin of the expansion, happened extremely quick. And so that potentially is an idea that I've been playing with, that if we've had an expansion that has ensued as fast as this one did to the downside, and to retrace the entirety of our, expansionary move up, then potentially what we're going to be seeing is some form of accumulation that is in essence and nature is equal to what we saw from that expansionary move down. We are putting in an accumulation model off these lows. That's a very good sign. Again, I think we're skewed to the upside here, locally speaking. It makes sense to me, especially with what we're seeing with regards to the majority of forced sellers are out of this market for the most part. In regards to crypto, if we do see a broader pullback in equities, and no doubt we're going to be seeing a pullback in crypto with how thin the order books are. But you should, at this current juncture, in my opinion, be leaning towards the markets being skewed to the upside, at least in our low to mid time frame structure, with this accumulation model that we are putting in here on Total 2ES. And I look at RSI does look pretty decent, and you're going to be then targeting your supply regions. I have the supply regions marked out here at this level at 1.27 trill and then 1.32 trill. That's going to coincide most likely with Bitcoin coming up to 116K. If Bitcoin can break 116K, you're likely going to be seeing a break at this level alongside Total 2ES. We always look at the indices because it gives us a broader outlook on where the market is currently standing and where we're currently at. A little bit of a flat day today. We have some names up, some names down. Nothing too significant here on this Friday. A little bit of a low volatility regime. And something I've been discussing as well that's very important for these markets is that you retrace the expansionary move lower. So if we look back to the comparison that we were making back to February of this year in relation to where we were at before we had this larger move up, you were in some form of compressionary period, right? Let me just clear up this chart actually real quick and we can run through it. So leading up into February, before February, we're in compressionary period in December. And then from the December lows on volatility, we then entered into an expansionary period. And what tipped the hat for me that we were going to be seeing a broader pullback, which I did drop on my timeline at the time, and it is timestamped, you can go check it, was that volatility is entering into now an expansionary regime. And we were unable to retrace back down to the origin of the move from February in regards to the first leg higher from volatility. Whereas as of right now, we are encroaching onto that point of origin and that low that we set before we had set expansionary period. So it's very important here that we do get a break of market structure back down to these lows, because otherwise you threaten, very similar to what we had at the end of last year to beginning of this year, a compressionary period marked by this trend line entering into expansionary period marked by this trend line. And then you're going to be seeing a larger unwinding volatility if you are not able to break back down below these lows. I would like to see a daily or weekly structure break these lows. That is very important for me. It is going to be a really good sign for the markets that we're going to be largely heading higher into Q4. This is one of my broader risk on signals. And I think for crypto, at least locally speaking, you should be skewed to the upside due to the accumulation that we're seeing in Total 2ES. And accumulation models kind of getting set in across the board. Again, markets are very thin, and it's very much so a trader environment. And as a trader, you need to be very, very quick in and out of your positions. It is high volatility environment, very thin order books, and there should not be, in my opinion, there's not going to be a significant trending move until you do get some form of reassurance from the broader market in regards to what's going on with tariffs, what's going on with the government shutdown. How are we going to be exiting this quantitative tightening cycle from the Fed? The Fed has been known that we're going to be entering into QE. They're going to finish their balance sheet runoff, which is significant. That is a form of QE in a sense. We'll see what happens. You got to be, there's some good setups here on the lower time frames. There's a lot of volatility. Order books are very thin. It's very manipulative right now. We've been navigating it very well within the Discord. And you just have to give this market a little bit more time, it seems like. Be a trader. If you're a trader, be quick in your positioning. I don't think there's any reasons why you should be sitting in your positions for really more than like 24, 48 hours, with the largely majority of these moves getting retraced fairly quickly at significant points of inflection. We're compressing across the board. It just makes sense that you be cautious, you have some form of long exposure and some form of short exposure on, and you kind of go from there. If I'm looking at what I would like to short, we did pick up a nice short in Zcash the other day from 267, I believe, 267. We shorted it down to 232. It's time stamped in the Discord. Beautiful exit on that trade. Some of these names that have showed relative strength in the face of weakness, broader market weakness from majors, to me makes sense for good short opportunities if you're seeing, potentially weakness out of majors. If you're wanting to, have long exposure on the board, to me, it makes sense to be looking at majors for the most part. Some alts do look good, some alts do not look good. It completely depends on structure. For instance, if we look at XRP, this looks like very similar to Total 2ES accumulation model on the lower time frame. But if we do look at some of the newer names, we can even look at Bonk, for instance. This structure is not as clean as XRP and some of the other ones. And to me, this kind of is leading me to believe that maybe some of these alts are going to be backfilling some of their wicks. If we look at the cyclical trend, it typically takes a few months for altcoins to come out of those lows post capitulation and really start to see expansionary modes higher, harvesting those riper liquidity conditions alongside a new all-time high being set in by Bitcoin. So that's what I got here for you guys. This is Trick or Trade. We're keeping it nice and sweet here on this Friday. I hope that makes sense to everybody. Again, be fluid within these markets. Look, if you're looking for shorts, altcoins are most likely your better bet, particularly the ones that have showed relative strength in the face of broader market weakness. If you're looking for longs, I'm most likely looking to be very selective with a few specific altcoin names, and then as well as majors. So with that being said, this is Prometheus. As always, I hope you guys enjoy your weekend, your Friday. With that being said, we will see you guys later. Peace out.